This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast with Dr. Charles Martinez from the University of Tennessee in Knoxville. We were talking about the cattle on feeds report from last week. Then we were talking about the beef demand with Brian Earnest from Quebec and Brad Kooima from Kooima Evielk trading on the cattle markets with the stocks markets for today's episode of the Market Club podcast. The cattle herd is getting smaller than previously decades. We were talking about that with Dr. Martinez. Here's Dr. Martinez from the University of Tennessee. We'll take a moment to review of the Cattle on Feeds report on last week with Charles Martinez from the University of Tennessee in Knoxville. How are you in Knoxville?
Doing good. We've been getting a lot of rain. Thankfully, it was kind of getting dry there for a little bit, and coming off of last year, it was dry. A lot of the second half, and so finally we're getting some rain, and it could be somewhat unfortunate for some folks that are trying to plant, but I'm pretty sure most people will take the moisture rather than continue to plant in dry conditions.
What is your thoughts on the Cattle on Feeds report? Because it was lower for 2%.
Yeah, so if people follow the cattle on feed reports, it comes out every month, and it was a report that as we get into the second quarter of the year, and we kind of see what was being placed, and we have some expectations based off January 1 reports. It was a report that was kind of, for lack of a better term, kind of gave us kind of what we thought it was going to be in terms of placements being down, or yeah, lower supply by 2%, just because we have lower supply of cattle. And I think some folks were even thinking it could have been lower. But seeing 2%, I think that was kind of on average and par, or on par with what a lot of expectations were going into it for that monthly number that we do get to see. I think some of the other interesting stuff was more of what we'll talk about here in a little bit.
What happened to the cattle expansion for this point, Charlie?
So, if we think about the cattle on feed reports, they do come out every month, but every quarter, there is like a little nuggets that come in those reports. And one of the nuggets that were in the report this past month or last week was it was the heifer demographic. So what percentage of the cattle on feed are made up by heifers, and so that number kind of gives us some expectation, or some inclination as to what we can expect moving forward, with any thoughts of expansion, or are we still in liquidation, or are we kind of in a holding pattern. And historically, if we look at the percentage of heifers that make up the cattle on feed, and when we're in a true liquidation state, we're bumping around 40%, sometimes above 40% of heifers that are on feed. Well, the heifer demographic that we saw, or the number that we got in the last report, was right around 37.5%. So, by definition, it's probably not in a liquidation pattern just by the simple stat. But with it being high, and comparing it to last year, it is a little bit lower compared to last year. So we're not in the same type of liquidation state that we were in, but we still have relatively high supplies of heifers in the feed yard. And when we're not in a liquidation, or if we're in a rebuilding year, we'll see that number drop below 33, 32%. So, that number does tell us that we're not liquidating as fast as we were in the past couple of years, but we're still probably have some slow drip liquidation still happening. So in my thoughts prior to that report, and especially coming into 2025, I've kind of thought about 2025 as being very similar to what we experienced the last 2 years, where we do have some type of liquidation occurring, and 2025 was not going to be any different compared to 2024, but it would still be very different than 2023 in terms of the rate of liquidation or the rate of how many heifers we weren't retaining. And so the inclination for me now getting this report and having some updated information with these reports, I think this year we might start seeing some thoughts about expansion depending upon where you are in the country, especially depending upon the weather, given that we're kind of in El Nino patterns. I think it's going to be something that, depending upon where you are, people might be thinking about expansion. But then once you start saying, okay, I want to expand, I think there's some other limits that could really go into that equation, such as the cost of borrowing, with interest rates being higher than they were the last rebuild, which was in 2014, 2015, 2016 timeframe. I think I think when we start thinking about the cost of inputs being higher now than it was back then, and also just in some areas the limited space or the limited acreage that people would want in order to expand. I think there's some hurdles that we got to jump if we want to expand. And so I think once we hit if I had a magic button and I hit that magic button to start expanding, I think we start thinking about those types of hurdles that we got to jump. But also, I think as we expand, because we will expand at some point, the market signals will demand that for the producers. I think we might not be expanding at the rate that we did the last time, because as we ramped up and at the pace we ramped up and expanded the last time, I think some people, they might have expanded pretty quickly and in large numbers. And then with the price falls the price falling back then around that 2018, 2019 timeframe, I think that puts pressure on people to think about, well, I don't want to expand and get big too quick because look what happened last time. So I think there is some learning experience that comes from the last expansion that I think will also slow the expansion this time or this go round. And so I think if we do start seeing some expansion in 2025 throughout the rest of the year, I think it's going to be one regional dependent, but also I think it's not going to happen at the pace that it did last time, which will then also kind of give some support to also stable prices as to where they are right now. We might come back and repeal a little bit, in the next year or so, but they won't be dropping nearly as fast as they did the last time from a supply impact standpoint.
Do you have any concerns on the recession in the future because of the consumer budget is pretty tight?
Yeah, so that's something that I think doesn't get talked about enough. If we look at demand, and I'm just going to pick on retail beef demand last year. We had retail prices reach highs that had not been seen before. We were breaking all-time highs. Well, at the same time, we actually had increases in retail beef demand every quarter last year, and actually, as a whole, last year was the highest that we've had in the last 24 years. And so, while we've had these increasing prices to the consumer, demand has been strong, and some of that's going to be a function of the competitors or the substitute proteins like chicken and pork also increasing. And so, from that standpoint, that shows us that we have really strong consumer demand. But then also, I think as we start having concerns about recession, if we look at the most recent consumer price index, prices are still continuing to grow. I think the last report that came out today indicated that there was a 1.2% increase in the consumer price index for people on the beef side. And so if we compare that to last year, the consumer price index increased 8.6% year over year change from March to March. So March 2024 to March 2025, we saw an 8.6% change or increase for consumers. And so we see that occurring, and we are already at high retail beef prices relative to the historical prices. And so the fear is a real concern of, well, if we lose beef demand or if we have some pullback in beef demand, while we still had a really good year last year, we could see, depending upon the level, if it was to repeal and go down a little bit, we could see some dynamic shifts throughout the supply chain that would affect, every sector from the fed cattle side to the feeding side to all the way down to the cow-calf producer. And I think the only reason why it doesn't get talked about enough, one is because it's not often thought of when we think about price changes in the cattle industry. More often than not, it's because of supply fluctuations. But since we're at these levels that we've never seen before on the retail beef side, I think a 1 to 2 quarter change in retail beef demand that was to decrease could have immediate impacts on the supply chain more so than a supply shift of expansion. Because we know as we expand, that takes around 16 to 18 months to really have impact on prices. If we were to have 1 or 2 quarters of really bad beef demand, that could impact the supply chain and prices pretty immediately from right now. And so that is a real concern. I think that if we are thinking about that and kind of being realistic with it, I think that lends itself to really thinking about risk management and thinking about, what if prices were to tank? We saw it on the boards 2 weeks ago with the tariff announcement when they crashed for a couple of days. If you were marketing animals, then it was kind of unfortunate. It was an unfortunate time to be marketing animals, and if you had no risk management and you were kind of going in unprotected from a risk standpoint, you kind of had to leave money on the table, and that's in this time in this time of production when we're seeing the highest cow calf prices that we've ever seen. That's unfortunate. So I think if we're real with ourselves and thinking about that as a real concern, I think that lends itself to having real need to put some thought into having some type of risk management program, even if it's something simple as livestock risk protection or something more advanced like futures and options. I think something needs to be done in order to protect those prices from a downward spiral that could happen relatively quickly if we lose U.S. consumer demand.
What is the retail demand for right now based on your research at the University of Tennessee?
So what we get is these quarterly reports that come out, and the most recent one still has it pretty strong demand. The most recent one we had was at the end of 2024, so we have not gotten the first one yet for 2025. But as of January and February, at the end of last year when we got those reports, demand was strong, and it was actually the strongest fourth quarter that we've had in the last 24 years. So right now, I think we're still on an okay standpoint with the U.S. consumer. The question is going to be if there was a recession to hit, how fast would that hurt us? But also at the same time, if we think about prices and thinking about a whole beef carcass, I think this year, and I was saying it in January, I think we were going to test the willingness to pay by the U.S. consumer for beef. I think that puts a double pressure, or puts another point of pressure on that concern of what happens if prices were to get so high that it can run off some demand. What would happen, and if we have a recession, that's the other pressure point, right? So I think currently in the data that we have for demand, we're okay. But I think if there was to be a recession, I think that's where we would start seeing some changes in the consumer preference at the retail level, and especially if we look at other protein sectors, if their prices were to go down as well compared to beef, then I think we'd also start seeing some other pressure on keeping and maintaining the strong beef demand that we have.
How is the pastures in East Tennessee?
So, the pastures in East Tennessee, we're just now getting some rain that we needed. It's been, like I mentioned earlier, we had some drought last year, and if we think about Tennessee, it's a really long state. It's not really tall, but it's really long. And we were seeing a lot of differences between Middle Tennessee, especially lower Middle Tennessee, compared to East Tennessee, where we were dry. Lower Middle Tennessee was really dry. And so the most recent rains that we've gotten the last couple of weeks have been really helpful in terms of getting pastures ready for the spring, and especially for the folks that are baling hay, or baling hay is part of their enterprise, and also part of what they use for inputs for their animals. I think we're getting set up pretty nice right now for the year. But the question is going to become, we know that April showers brings May flowers, which is the old saying. The question is going to become when we get to June, do we still continue to have some of that moisture and do we continue to have some of that rainfall that we're going to need in order to get ready over here in the fescue belt? And I think if we were to look at drought monitors across the East Coast and the East Coast line, we were already kind of subject to some drought at the end of last year, and people were having to reach into their hay stocks early to get through the winter. And so I think if we can get enough rain, we can replenish some of those hay stocks, but also have some pasture to graze. And but if we were to hit some more drought, I think we'll have to really start thinking about getting back into our hay stocks early, which then will also just kill any thoughts about any herd expansion here in the southeast.
How about in Kentucky, Georgia, because they were cattle states too as well?
Research, there's kind of been this paradigm shift where we see consumers, instead of substituting away from beef, they've been substituting within beef. And what I mean by that is they might not be buying as many steaks as they used to or as much as they could afford, but instead they're buying more ground beef or different cuts. And I pay attention a lot to what's in the meat case here in East Tennessee at our local Kroger and what's being offered. And we see a shift, and I've seen a shift in what's in the products that are being offered. So we start seeing a lot more fajita meat. We're getting into grilling season, as I mentioned, but also various cuts of sirloin, some prepackaged products like filet mignon, different amounts of ribeyes that are offered in a package. Thickness has also been something I've realized or seen. Instead of thick ribeyes, they might sell a lot more thin sliced ribeyes to try to help the consumer. So I think the wholesalers and the retailers have also understood that there is some pressure out there for the consumer, and so they're trying to offer a different products mix compared to what we would have seen, in 2021, 2022. And I think that helps lend itself to having stronger beef demand. That flexibility of the wholesaler and the retailer to have products that are more suitable for a tighter budget household lends itself to maintaining that protein being bought by the consumer. And so, right now I think we're in a good spot still. I think there are some maybe possible headwinds ahead. Are they strong right now? I would probably say no. I think we're still. It would take a lot for retail beef demand to take a hit, but I think if it was to have a long extended period of time where there is a recession, I think that's when we'll start seeing some effects.
Do you have any final thoughts on the cattle markets for the future, Dr. Martinez?
I think everything we've talked about, and I kind of said it at the very beginning. I think with all the uncertainty and all of the unknownness, that creates volatility. And with so much volatility at the prices that we're seeing, I think a strong risk management program will really pay for itself. And I would encourage producers to really put thought into that. And then if you're in a good spot where you actually can rebuild here in the next couple of months, or if you're thinking about rebuilding, I would put some strong consideration into thinking about what you're rebuilding with. And have a clear objective. Is it going to be based on rebuilding with just numbers, or is it going to be rebuilding with higher quality animals? Is it going to be rebuilding with a combination of both? Is there something you've wanted to change, like reproductive efficiency? Excuse me, if there was something you wanted to, from a management standpoint, increase in, think about that. If you're a feeder in the feeding side of things, cattle have been very expensive, and I think I've seen a lot of feeders and talked to some folks that are saying, hey, we do a lot more risk management than we have in the past. The question is going to become, with these tight margins, if not, negative margins, how much longer they can hang in there. So if we were to see some prices decrease, that might be, more favorable for the feeder, just depending upon what happens. And then if we think about the feeding side, the fed cattle side, there's always going to be discussion about capacity. I know there's talks about a packing plant coming online in Nebraska. That would be pretty substantial. So does that alter some of the market dynamics that we see with grilling season coming? Is that going to alter what's being demanded by the packers? Because if we look at slaughter weights, we're also reaching all-time slaughter weights. So It's an interesting time right now that has a lot of different moving variables depending upon which segment you're in. But I think across all sectors, I think risk management is one of the things that everyone needs to be thinking about, if not implementing already. And if you are using risk management, I think a lot of people have seen it pay off for them in terms of protecting against a downslide of prices.
Thanks, Dr. Martinez.
Oh, thank you. I was glad I was able to
This is
get on with
Charles Martinez from the University of Tennessee on back roads of Illinois.
Thank you.
We were going to have a conversation on the cattle markets with Brian Earnest from CoBank. Otherwise, welcome to the show.
Thank you, Caesar. I appreciate the opportunity to chat with you a little bit about what's going on in agriculture and dig deeper dive into what's going on in the animal protein space.
Brian, do you have some concerns about the cattle markets with the economic uncertainty?
Well, I think for the producer, the concern has been over the last 5 years or so, access to arable pasture land or forage conditions, and that kind of has led us into a situation, I think, where the producers contemplating retention, and they have been the last couple of years. And all this has led into, I think, maybe what the concern would be from a bank perspective is, do they have access to capital to continue to respond to what has been really, really strong beef markets? And all that, I guess, in more simplified form is, thinking about where cattle prices are and the capital requirements to either grow cattle herd from from where it's currently decreasing, and what that means throughout the supply chain as we have a consumer that has really fallen in love with a high quality beef product that the U.S. producers make. So that's kind of where one kind of lingering concern has been over the last couple of years, and still remains in effect as we're going into another grilling season here and expected to see stronger demand again, probably more at retail than food service this year.
What is your take on the R word as a banker perspective?
Can you repeat that one, Caesar?
What is your take on the R word as a banker perspective?
Ah, yes. Thinking about the R word. We've got a condition, I think, in the United States where we've got a lot of folks that are employed. Unemployment levels really at pretty much full employment right now. Inflation has been kind of the dirty word the last couple of years, and certainly it has had consumers kind of rethinking or adjusting their spending around higher prices. Food has been one of those staple items, though, that we're not seeing quite as much adjustment as a result of inflation. And specifically at the meat case, we're still seeing pretty strong demand, at least at retail, for meat. And I think I have been watching this long enough to continue to have kind of that question of what happens as we enter a period of potentially some economic disruption, and what does that mean for the meat case? And if you look at what's going on at retail, we're continuing to see both dollar sales and volume stronger around fresh meats. And all this is really telling me, if we think back 5 years ago, we had a consumer that was kind of, they were splitting their expenditures about 50-50 between food service and groceries. And then the COVID-19 came in and kind of disrupted that, and folks were not able to or not willing to eat out at restaurants as often. A lot of this had to do with social distancing measures put in place and that sort of thing. And I think what happened was consumers learned through that period a couple different things. One of those was they had access to really high quality meat items at the grocery store. And they also learned how to cook through that period. So, that was a learned behavior that I think kind of is playing into what we're seeing today. And as we potentially, move into a period where folks are thinking a little bit more closely about how they're budgeting their income, and that sort of thing is kind of what I'm thinking about is from a consumer standpoint. What does the potential of the R word have to do in this environment?
Of course, we change our behavior since January 2020.
On hand, but that's one of those costs that I think is much higher than what it was 10 years ago. Um, Capital costs in terms of equipment continues to rise, and that's one that maybe we'll see a little bit of relief come in this year, but overall that replacement of equipment continues to be higher. But land values is one that is a high cost component for for ranchers, and access to that land with rents being higher continues to put pressure on availability as well. So I think those kind of key inputs for this particular sector makes it a very daunting or difficult uh, to factor in of what costs are going to be there.
How concerned for the labor problem with this situation, Brian?
Well, labor's a difficult one. I think the industry, the animal protein industry as a whole, has had difficulty with staffing. You know, at least over the last 20 years, but maybe we could look back even further than that. If you look back about 100 years, roughly 50% of folks that were employed were in the agriculture sector, and today that number I think is less than 2% of the U.S. population. So, that's just one factor of folks kind of moving off farm. Have less of an attachment to farm, but trying to find folks to fit those roles is difficult and exceedingly difficult to find skilled labor in that sector as well. When I look at the packing facilities, if we go upstream a little bit, I want to talk about the meat side of the business and poultry. They've typically relied pretty heavily on foreign workers to do what is, not necessarily a favorable or a desirable job at a lot of these meat packing plants, and also requires a skill level that a lot of folks don't have as either. So, that is becoming increasingly difficult to staff some of these plants. I'm hearing from some of the poultry plants, though, in recent years that depending on region or geographic, that they're having better luck finding and retaining employees, but they're paying more money to do that, and they're providing much better benefits in terms of work life environment than they did 20 years ago. So overall, they're trying to be a desirable place for employment, and that takes a lot of effort on their hand. But overall, we've got tight labor overall. If you look, we're at full employment right now. And we have been here for last several years. So overall, it's become increasingly difficult for not only agriculture, but industry in general to find capable workers.
What is your final thoughts on the cattle industry for right now?
Well, I do think, one thing that I've been looking a little bit at, we've talked about the consumer a little bit, and that's where the bulk of my background stems from is kind of the consumer side of the meat in general. And we talked about how COVID kind of helped consumers learn how to cook again and learn that they could get access to a really high quality meat item at home. And even at the local grocery store. And I think this is one thing that has consumers, they'll keep coming back even despite these higher prices we're seeing for beef. So for the cattle producer, for the first time in many cattle cycles, I think the consumer demand is one of those features that it is difficult to see a scenario in which that goes away, all providing optimism for where the market is in general in terms of tight supply of cattle in general. So here I'm very optimistic about what lies ahead for this sector. The cattle feeder and the cow-calf operator in general, it seems like there's one part of the picture that is a little less fuzzy than it's been in less cattle cycles. So encouraged by that, and I think a lot of that is owed to these programs and the cow-calf operator who has decided that they're going to go after quality. And it's remarkable what an industry can do when they're all kind of trying to get on the same page and provide a real high quality item, what we've seen of the U.S. beef in general over the last 2 decades. So that I'm very impressed by this sector, and I'm optimistic for what lies ahead for beef and cattle in general.
Do you have any concerns about the PI numbers in the future, Brian?
The in the futures market, thinking about what's there, my concern is when we get to the packer level, we've seen these packer margins that have been at a national level weak and very negative for, I think we're going on 4 quarters now, that we've seen difficult situation for margins for cattle producers. Um, Overall, I think that will probably need to be rationalized at the production level, not necessarily at the cattle market, but how much capacity there is in the system. So we'll see how that plays out this year. I really don't have a whole lot of insight to provide there, but at some point, a negative margin works itself, and there'll be a market solution or rationalization overall that is likely to occur when we have this sort of a market swing. So, but we are seeing more dollars come out of the consumer side, so maybe it evens itself out in the between beef and cattle. So, yet to be seen there, but overall, I think the consumer, at the end of the day, still have access to really strong quality, high quality beef item at an affordable.
I'm joining with Brad Kooima from Kooima Evielk Trading on the Markets Club podcast. How are you, Brad?
Hey, I'm fine, Cesar. Thank you. It's a fun time to be talking about the cattle market. That is for sure.
Brad, how is the fundamentals on the cattle markets with these prices?
Well, that's a great question. Cesar, I think what we're seeing here is I don't know, this morning I described it to someone almost as though a volcano that's been, brewing and brewing and brewing. And what I'm talking about is a series of fundamental events here that basically this is the longest cycle I think I've seen, where it took us over 7 years to liquidate the cow herd down for various reasons, drought certainly being one of them, the COVID debacle in 2020, where cattle feeders lost all kinds of money, and we lost a lot of cattle feeders because of it, and we lost a bunch of our inventory as well. And going back even, before that. So we've seen a tremendous liquidation here of the overall cow herd. In fact, the cow herd's the smallest it's been since 1951. The calf crop that we're working with this year is the smallest in over 75 years. So, from a supply side fundamental deal, we've got the supply tightened down to, levels that, well, in modern history, we haven't been this low. So, clearly, if you look at the supply side of the deal, we are extremely tight, and it doesn't look like there's anything to change that here in the next, at least 45 days, in my opinion. So the supply side of the market's very, very tight. Of course, we're all wondering about the other side of the equation. As long as supplies stay tight, how long do we maintain the demand the way we've been seeing it lately?
How about the technical aspects on the cattle markets with these markets?
Well, today you're part of history, Caesar. Made all-time highs on the live cattle contracts today. And when you've got, so obviously we're in a screaming uptrend. The only thing maybe you could find a little bit of a flaw is that the market's very, very overbought. We're talking about a market that some of these months have rallied $16, $17 here in the last 3 weeks. So, we've gone up extremely quickly, more quickly than normal. So we are overbought, but when you're making new contract highs, and I'm going to take a little bit of a side road off of that question, if you don't mind. The funds play a huge part of our marketplace, and the funds are largely trend followers. Okay. So, as this market continues to uptrend, you see these funds continue to add long positions and continue to add them. So, right now we're in a good place from a technical standpoint, and the fundamentals also in a very good spot. So yeah, it's a nice time to be talking about the cattle market.
How is the May feeder cattle bred?
I'm sorry, can you repeat that, please? Signs in the cattle fundamentals. So I worry that it's going to be something unexpected that tops the market here. And one of those things could very easily be if we get a downturn over there in the stock market or any of the equity markets for that matter.
How is the rangeland in southern Iowa, South Dakota, Nebraska?
There's some areas here that are intensely dry. Southern, western South Dakota, a good share of Nebraska, particularly central and western Nebraska, and that extends all the way into big parts of Wyoming. And it's significant to the cattle thing because there's people there that I've talked to that are questioning whether they even dare to turn calves out to make yearlings on them. That's how dry it is. There's a lack of grass now. There is a couple of moisture systems, obviously, you hear that are forecasted for in the very short term. And of course, we're hoping that for their sake, that something can come out of that. I don't know if you can expect to liquidate our cow herd much more than we have already. I mean, we've already taken this cow herd down to a bare bones deal, but that would be in the worst case scenario, Caesar, if that dry area expands in the grass country big enough that you might have to absorb another round of liquidation, which would mean more cows to market and less heifers held for retention.
How is the weather in northwest Iowa? You're in.
It's actually, we've got a chance of some storms here this afternoon, but it's actually been we're a little bit drier than normal. We're still in that that moderate official drought meter thing, but we did did pick up some rain here last week. Planting progress would be ahead of schedule here because it's been dry. There's areas that are in far worse shape than we are. We'd always take a rain, but it's still a little bit drier than normal, but the crops are going in good shape and a little bit ahead of schedule.
Do you have any final thoughts on the planting intention report for the cattle producer?
Well, obviously, the cost of gain, what corn's going to cost, that major input in our ration, is something that we're going to be watching. And of course, I say a little bit tongue in cheek, on April 28th, you can't raise a crop yet or lose a crop yet, but this is when we start to dial in, and we'll talk about weather, every week now for, well, a couple of months until we get on the other side of 4th of July, probably. I would say, as the cattle guy, he doesn't mind a cheap feed. It's a totally different story, obviously, for your grain farmers, but my sense would be that you're going to get a report here, the crop going in a little bit earlier. Of course, we're working on what we expect to be a huge acreage planted of corn. The last two USDA reports have been slowly inching that number higher on planted acres. And I guess, frankly, I think with this mild or this dry weather to start the planting, that could even get even bigger than that. So we'll keep an eye on that and all the other weather factors. But it looks to me like right now, I think the cattle guy is probably looking at a situation where he's going to have a reasonably priced ration if corn stays like this.
What do you think about the balance sheet on May 12th?
Fair question. I think that we are going to realistically, everybody wants me to be bullish, but I just am not feeling it. We're not going to run out of corn or soybeans, particularly in the world. The situation with the beans is not a healthy deal. I mean, there's plenty of it to go around. Now the corn thing is also impacted, Caesar, by this wheat market. Today, the wheat just fell out of bed because it's finally raining in the wheat country. Wheat's cheap and there's lots of it. So I'd be a little worried that the balance sheet might show that we continue to have plenty to go around. But the cure for low prices, of course, maybe we can pick up a little bit of demand and maybe we can pick up the usage a little bit. But I don't see any magic bullets here coming up on this first May 12 report.
Yeah. Thanks, Brad. It's pretty disappointed with the Vikings about the discussion on the quarterback situation.
Yeah, I know. You're welcome, by the way. We'll see. Maybe McConnell can make JJ an all-pro too.
Yeah. We've been having a conversation with Brad Kooima from Kooima Evielk Trading on the Markets Club podcast. Thanks to Dr. Martinez from the University of Tennessee. Thanks to Brian Earnest from CoBank, and thanks to Brad Kooima Evielk from Kooima Evielk Trading. This has been the Markets Club podcast. I'm Cesar Delgado. You have a good day.